All right, well, welcome back, everyone, to the RLT Pivot Podcast. My name is Tracy, and I am again joined with my amazing co-host, Mr. Dan Jansen. How are you, sir?
Doing good. How are you, Tracy? Good to be back on another episode of the Pivot Podcast. Hanging out with all of the people here in All Access Pass in real life trading.
Spectacular.
It's going to be a fun episode today. Fun episode because it's all about how you manage the trade exits effectively. I don't know why, but I mean, every now and then I'll get questions of like, how do you move stops? How do you, like, why would you exit? All of that stuff. Recently, though, I've had a lot of questions about that, like from multiple people. So I think it's a very, very timely episode just based on just some of the questions I've been getting. So, Tracy, number one, why have stops? And do you have certain rules in your plan about when you get to move those stops?
Oh, of course, absolutely. But before we dive into that, again, I wanted to actually say the same thing because I've been doing this for, quite a while now, and I've been coaching students for a long time as well. And there seems to be a consistent pattern, and that is a lot of people will jump into a trade and then they have no idea what to do once they're in it. And that's why it's really important to have kind of some rules in place that talk about how you're going to manage your trade. And not only that, about preparing it before you even enter the trade, having that idea of how you're going to manage the trade on the exit side of it, like what's your exit strategy, both for cancellation of a trade or exiting early or holding for profit. And I find that a lot of traders that don't have this type of a plan in place, they don't know what to do. There's the ones that end up exiting early on a trade that works and exiting too late on a trade that doesn't work. That's two of the common results of not having an exit strategy in place. And for a lot of traders, well, Dan, actually, why do you think that it's important for traders to actually have an exit strategy from a perspective of emotions?
I think doing anything without a plan is a good question. I think doing anything without a plan makes you feel like you're not in control.
Right.
I think people are most calm, collective, suave when they are in control of the situation. They kind of forecast what should happen with the stock, and when the stock is doing what they think, it's a better feeling. They're not rushing to mixed emotions and things like that. So I think the same thing with how you plan your entry, how you plan your setup. I think it's the same thing on the way in. Or the way out that you would take the way in. So if you have defined rules of whether that's a certain time frame, if I enter a trade, I cannot move my stops for 5 minutes, 10 minutes, 15 minutes. I can't move it until it passes or wicks through some kind of moving average or makes a pivot, and sentiment is showing that the bulls or bears, whichever direction you're in, is still in control. Once you have that in place, everything is more systematical of just, there it is. My plan says this is what I have to do. Mm-hmm. Right. And I think it almost, you're still going to have emotions but it's more of like cheerleading emotions where you're like, come on, get to the target, go get higher. It's a little different than like, I'm freaking out, panicking. I don't know if I should move it. I wish I had somebody else I could talk to about this one, and I need to consult a professional. Once you have everything in place, once you understand, okay, this is how I back traded. I know my amount of R's I've been able to receive from this strategy, from this setup on this ticker. And I've been receiving those R's by consistently, methodically moving those stops into certain places. So realistically, I think by having those, really having it written out, having a defined plan and back trading that strategy takes out a lot of kind of the guesswork and puts it more into a system.
Right. And now, just so we're clear, having an exit strategy does not just, it's not including, or it includes more than just stops. That also includes targets, and it's your overall exit strategy. How you get into the trade, that's your entry strategy. How you get out of the trade is your exit strategy. That can involve stops. It can involve trailing stops. It can involve marketing out. It can involve hitting targets. It can involve taking everything at a specific target. It can involve taking partials. All of these are different types of exit strategies, but it's a plan in place. Now, one of the other benefits of having this plan of attack of how you're going to exit your trades also enables you to be able to judge your risk reward appropriately, right? Now, a lot of traders, they'll jump in, oh, this is a great exit. I see a signal, I'm going to get in. But because they're not considering the exit strategy, they're not considering where could this potentially go to? Where do I want to exit the trade? Assessing risk reward tends to be missed. And a lot of times what ends up happening is that resistance that's sitting smack dab in front of you that's going to prevent that trade from succeeding is there and you don't even see it. And the reason being is because you don't have an exit strategy. You don't have an exit plan of how you are thinking about your trades systematically. You wait till you get in and then you figure it out after. And that leads traders to a lot of problems. It actually causes a lot of people to get trapped for that reason because you're not considering where you're going to get out. And so just keep that in mind. Your exit strategy is not just your stop placement. It is also your target. Where are you going? All right. So as far as your question earlier, you asked me, do I have rules? And yes, I absolutely have rules. My exit strategy will change depending on whether we're in a sideways market, whether I'm counter trend trading, or whether I'm with the trend. So basically my strategy for exits, it encompasses a few different things. So I either have a take-all target. I always have a take-all target, but I will either take partials on the way to that take-all target, or I will just wait for it to get to that specific target and take everything and exit. I won't try and hold. And then there's my stop management rules. So those are the three types of, I guess, exit strategies that I have in my trading plan. And really, I find the exit strategy to be the easiest because I've worked so hard on where my entries should be that I know right away whether I should be exiting a trade because it doesn't work immediately, or I can hold and I'm very calm and I'm able to carry that trade to my targets, and it's very systematic. And I'll give you an example. Today, I traded the SPY. Well, I should say the ES. I traded the ES because I was trading futures, and immediately off of the open, the future started to sell off. My plan was to sell as high as I possibly could sell. And I anticipated that this would be a gap close. That's what I was expecting based on my own analysis. And so I was waiting for the overnight high to get taken out before I entered. And it was excruciatingly painful waiting for that to happen because it was a lot of sideways action until it did. And unfortunately, the longer that it takes, the more bullish it starts to look when it does. But I had my plan. I stuck to it. I waited for it to break through the overnight high. I entered my short, and then I held it for another excruciatingly long time. And it went down to just over a 1 hour profit at some point during the day, and then all the way back up. It didn't come up to the point where it was going to stop me, but it was like, okay, well, this is getting close. I've almost given back everything that I had, but I'm playing it for the gap close. I just held it. My stop didn't even get moved. I just left my stop exactly where it was. And finally, it broke down, closed the gap, exited the trade, but it took all day for that thing to actually close the gap. And I patiently waited. Now, the first nude trader me way back when would have been panicking the first bullish candle that came in after the short. It would be, oh, I need to get out. And because I didn't have a plan in place, but I know what my plan is. I know how it's going to work. And really what happens between support and resistance for me, I don't care. So I only move my stops accordingly. And my target was set for where I wanted it. And I was either going to win or I was going to lose. And that was it. But that strategy, that plan, which I have practiced over and over and over again, and the exit strategy I have figured works the best for me and it yields me the best profits. And because of that, I was able to hold that and feel very calm about that trade. That was very long-winded and I apologize. But for all of those that are still awake, Dan, how about you? Do you have any strategies in your trading plan that deal with the exit strategy?
Oh, am I back?
There we go. Yep, you're back.
Okay. What I said when I was on mute was really important, but we'll skip it. We'll get to another episode. But no, and that's a great question. So with the, I don't really use any of the like moving averages or VWAPs even to determine where my stops are or going to be moved to. I'll use a lot of times the VPOC, or I'll use maybe a moving average or VWAP to set my trade based on where I think it shouldn't go. and I'm looking for volume, things like that. But for stop placement, I'm solely looking for sentiment on candles, which I'll determine by candles that volume that comes in on candles. If we are creating some kind of new pivot,
Mhm.
if the direction, if I'm going bullish on a trade, if that trade is like I expect pullbacks, right? And I think that's an area where, at least for me, when I was newer, like I hate pullbacks. Like I'm just like, wow, I just had point 0.8 R's and now I gave back point 0.4 of them. Like that sucks. But when you're trying to understand really the trade, I would love for something to get in and go right to target, but that's not how trading works, right? And that's I think that's where the emotion comes, because if everybody goes, okay, I'm gonna, and I think this would actually take a lot of emotions out of trading. If you get in and you say I'm gonna get in at this stock at $100, targets 101, and I get out at $99. As soon as you hit okay, buy me in, it goes either right to target or stops you out right away. I think trading will be a lot easier. Even taking the loss,
Yeah.
but you don't have to sit through like, okay, I'm losing, I'm winning, I'm losing. Okay, I'm giving some back. Is this enough? And I think that just the thought process of from you getting into the trade until you either get stopped out or hit target is the stressful part of trading.
Yeah.
Um, but if you start to understand, like, there's going to be pullbacks, there's going to be pivots, um, and if you're using those pivots in a way that you can now um, move your stops to where that last bullish sentiment or bearish sentiment ended, that's going to give you a good advantage of like, okay, I'm able to take risk off the table, which is really to me what stop movement is about. How much risk can I take off the table and allow the trade to work? And then once I can get my stop to break even, that's usually when I'll slow down on moving my targets unless I'm or stops unless I'm very very close to um very close to targets, and maybe I want to aggressively, it's not hitting me by a penny or something like that, and
Mhm.
I'll start getting a little aggressive to the end. But otherwise, everything else is kind of very systematic in terms of where I deem that the bulls or bears are still in charge or who's taking over, and that's kind of where I want to put the stops. Where I'm like, sentiment's changing a little bit, so let me get out.
Right. Right. No, that's excellent. Now we have beaten this with beaten it to death as far as I'm concerned. But as far as learning which strategy works best, we've said it over and over and over and over again that back trading the system is how you figure it out. Now, I've gone and I've back traded taking all profit at a specific level. I've back traded taking partials at every R level. I've back traded scaling my stop at certain places. I've back traded a variety of different exit strategies. And when I say back traded a variety of exit strategies, I keep the strategy the same, back trade all the trades, then I go back and I do the same trades and back trade a different back trading strategy. And then I go back and I back trade the same trades and I back trade with a different strategy. And I keep repeating the process over and over and over again. And that gives me the confidence to know what strategy works best under what circumstances. And I log the heck out of everything. So I have all of the statistics that I need to support the decisions that I make. Now, the question that I have for you, Dan, is how long did it take you after you were, when you were a new trader, to get to the point where you started to put more concern into your exit strategy, where you thought it was important? How long did it take you?
I mean, I don't have an exact time frame, but what I would say is understand kind of when I looked at trading a little bit differently was because I've done it all. I've been the mental stop mover where I don't put out a physical stop. I've been the one where I aggressively move stops. I've been the one where I don't move stops at all. We'll just walk away pretty much from the computer. I've tried every scenario in terms of doing it. I think the game changer for me was, and I think you allude to it a lot in the some previous episodes, but starting your trade with your exit, right?
Yes. Yeah.
Trying to find out where your exit is first, and then seeing if your risk reward makes sense based on where your entry would be.
100%. Start
I,
backwards. Yeah.
yep.
Yep.
And I think because a lot of people, I mean, if they see that one great candle, it's a hammer, it's all this, they're like, yeah, I need to hop in and take it, right? But understanding that if you're in a trade and you are like, if you see a good setup, but your stop is so far away where we're like, you're really dead wrong on this trade. and your potential reward of that after you kind of predetermine that doesn't make sense, it's okay to miss trades. It's okay even if it would have just flew right to targets and been the most craziest play you've ever made. I've had those. I've missed those big trades.
Yep.
But I've also missed losing a lot of money too by being able to pass on trades as well. So it's a little bit of a give and take, but putting your stop down first and just realizing like, okay, if I get in this trade, I only want to take one trade on that stock. Like that's the setup if it's in the right price range. And if I'm so far away from really where I'm dead wrong, okay, then I get stopped out. I'm okay, came back a little bit. Now it's a little bit better. Okay, now we're close to that stop. Let me take it again. And you're maximizing the amount of times you trade, but identifying where your stop would be first, that gives you patience. Let it come to that location, and then look to make your play.
Yeah, no, absolutely. It's I think it's the best way to go. And you know what? If we were to look at the real estate market, most of us, you got a buyer's market or you've got a seller's market. And I think that there's a perspective shift that we need to do as far as traders are concerned, and just tell yourself that it's a trader's market. And in the real estate market, if you're in a buyer's market, you're not going to pay more than you want. You're going to wait patiently and you're going to make your offer, and they either sell, but you're not going to get all emotional about the house that you're trying to buy and say, "Ooh, I better pay more." I mean, you might, but it's not necessarily good practice, right? And the thing with habits that you're talking about, the good habits, because you said you some of those things cost you. They cost you the opportunity to make some good coin. Good habits are sustainable for the rest of your career. And that's really what this is about, is longevity in the markets. It's not about a one and done. It's not about, hitting the first trade and getting the most amount of money that you can possibly get out of it. And now you are super rich and you don't ever have to do anything ever again. I mean, that is a lottery ticket of the, you guys call it the Powerball, I think, down there. So, a lottery ticket of a power.
We've got a few different ones with different names.
Yeah. So hitting that lottery ticket, that's one thing. That's gambling. And it's very, very rare for somebody to be able to hit a trade like that and just hit it out of the park and it becomes the life-changing, altering trade that they've ever wanted. I mean, that would be great if it happens, but the goal that you should be looking for is gaining consistency in the market so that this becomes a skill set that you can continue to draw funds, draw liquidity from the market, or draw dollars from the market, currency from the market, that can help you through your life forever. That's the goal. And the way that you can do that is by creating really good habits. And so when I say that it's a trader's market, do exactly what Dan's talking about. You identify your stop, identify your target, and then place your entry where your entry makes sense, where you get a good risk reward. And if you don't get filled, you don't get filled. If you do, you do. But just recognize that this is the risk reward that I'm willing to take. And I'm not willing to compromise. Be picky. Be picky. Be very picky. Right? That's another rant.
Yeah, no, I love it. I think when people learn to trade, they're learning what setups to take.
Yeah.
Right. They're looking for, here's a candle pattern. People tell me this one should break, and this is the psychology behind it. This is why it should break. Some people, you could read the market. You have good feel as to who's bullish, who's bearish, why. Maybe you're trading off current events, all that stuff. And most people probably plan their trades around their entry. Right? Where can I get into this trade is usually the first question. But if, like you said, if you reverse that, that will probably give you it will give you more realism as to if that's a trade you should take in the first place.
Yep.
Right.
Absolutely. Absolutely.
I would also say too, because I know you mentioned you have in your rules how to move your stops, why to move your stops. What for you, why is that something that you focus on when you're back trading?
Well, I have to focus on it because, again, I need to build some form of consistency. And when I back trade, and when you move a stop, let's say you're in a live market and you're seeing price action move and you're seeing it come towards your entry, or you're starting to see things turn around and you're losing income, there's a natural emotion that kicks in. And the immediate reaction is to exit or to stop it from happening, because you don't want that pain. You don't want to see that profit and go, oh my goodness, it's now, I'm either losing the income, I'm giving it all back, I made a mistake, I should have exited, and you start to feel bad about yourself, or whatever it might be, that there's a pain that's associated. There's a feeling, an emotion that's associated with that. And that causes us to move our stop prematurely. It causes us to micromanage. It causes us to do all sorts of things. And then here's the habit. You move your stop, you get wicked out, and then it goes in the other direction. You go, oh man, see the stop. I shouldn't have moved my stop. I just stops. I shouldn't use stops. And then you just like, see, it would have won. And it goes on and on and on. And you start to play these psychological games with yourself and rewarding bad behavior. And it's not a good thing. So for back trading, I focus very, very much on my exit strategy, when I move my stops, how I move my stops, where I take my partials, how I take my partials, if I take my partials, because that builds that muscle. And we talked about this last time, where we're trying to build that muscle memory, that trading muscle memory, on what it feels like to have successful trades. And if you ever want to get the big trades where you're hitting the 3, the 4R trades, or you want to be consistently hitting to your target all the time, then you need to be able to manage without emotion. You need to be able to take the fear away. And the only way that you're going to be able to do that is through experience. And experience comes in a variety of different ways. But one thing's clear, you have to have time in front of the market. You have to have time in front of the charts. And you can do that through back trading, paper trading, and live trading. Those are the 3 different ways that you can do that. There's no other way of getting that time to build that confidence. And each one of them has its benefits and its downside. But by building that confidence, the rest is up to me to execute, right? If I told you that if you just did a nice light little swing on a baseball, you didn't have to swing for the fence, and I told you that your batting average was, say, 450, and just by doing your nice little base hits, right? But every time you took that big swing for the fence, you had a 30% fail rate, right? If I told you that, would that not change your outlook? Say, oh, okay, well, if I'm successful doing that, then maybe I should continue to do that. Maybe I shouldn't be trying to go for that home run every time. Maybe I should be just hitting those little base hits, because I have the confidence that I know that if I hit this base hit, I'm most likely to get on, because the history that I have practiced over and over and over again is telling me the same thing. I've got the confidence to know that I have really good accuracy when I am doing those small little base hits. So that's why I practice that so much. Now, another thing that I do, because there's that fear and that emotion, I have found that what works best for me is to take a little bit of partials, because as I take partials, I don't need to move my stop. I'm reducing my risk by taking a little bit off the table. That's how I'm doing it, instead of moving my stop up. And what I have found is, for the most part, that gives me room to get to the next target. Because another thing about the markets, they're fractal. You've got different time frames that are working at different levels. So on a 3-minute chart, things might be pulling back deeper than you wanted, but when you look at it on a 15-minute chart, it's just a nice little pullback into the 10. And if you're managing it on a 3-minute chart, you might get stopped out. Meanwhile, it's still bullish. It's just doing a nice little pullback. So for me, one of the things that I've changed in the last little while is that I am only concerned with my support resistance levels. The bigger support resistance levels, I'm looking for clear levels. So if I have a target in mind, then where is it? And what happens in between those levels, I don't care about anymore. It's minutia. It's just noise, because what I'm expecting to happen is based on strong analysis. And I mean, it may work, it may not, but that's the way that I'm holding it. So I don't want to micromanage, because I find when I micromanage my trades, that's when you're getting wicked out of the trade, and it continues because another time frame is currently in control. And I'm managing it on the wrong time frame, unfortunately. And that's just the way that it is. And it happens and you have to live with it. But for most people, it creates an environment where they reward bad behavior because they blame the stop, they blame other things other than perhaps how they've over micromanaged it, right? And recognizing that.
I think you brought up an interesting analogy in terms of baseball. There was, did you see the movie? What is it called? Moneyball?
I did. Yes. Love Moneyball.
It's kind of similar to that because you have, and Rockin was bringing up Yankees and stuff in the chat, but you have, like in that era, that time before like analytics came out, there was all the teams wanted the big names. They wanted the guys that were power hitters trying to hit the home runs. And then you have, when you're actually looking into the like statistics, you're like, well, we don't have to spend as much money. We don't have to get the big home run hitters. All we need is the people that get on base. Like
exactly.
the people with the highest percentage of like, hey, you walk a lot. You hardly hit the ball, but you're really good at just walking and just taking pitches. Right. And the more people you have on base, right, the more likely you're going to eventually score. Right. And I think trading actually is something very similar to that, where it's you like, yeah, you could hit those home runs and there's probably people that are just, they're gunning for home runs all day, but your goal is to be consistently profitable, right? The account will build, you will grow your, if you're able to grow your account from, let's say the pattern day trade rule is 25,000. So let's say you're coming in, you have 25,000, you're able to day trade, and you're building after 5 years, 6 years. Okay. Well, you're consistently still taking the same trades. You're consistently making the same R's, but you're making a heck of a lot more money per trade just doing the same small things over and over and over again, right? Where, yes, somebody comes in, same 25,000 account, they're trying to 5x it. So now they're up to 125K because they hit a good options play or whatever it is. All right. It's very possible for them to strike out the next couple times, right? Mm-hmm. They're not great at getting on base. Every now and then they can hit one out of the park. But the person that can get on base more, the person that can move their stops to the correct places, the person that can take the partials in different directions, they're the person that will be consistently profitable and at the end making some real changes in their life, making some life-changing money, as opposed to that kind of one-off person that got a grand slam that one time, right? So I think the analogy kind of works a little bit from what you brought up, but
yeah, and not only that, but imagine a base runner that's running to second and the ball gets thrown to second. And can you imagine if they just stopped and said, oh, I guess I'm out, and walked off the field instead of giving an opportunity and waiting? That's the micromanaging part where you have a chance of getting wicked out. It's like, oh, this is a little hesitant. Do I continue? Do I not? Like if they just gave up and walked off the base and just said, I guess I'm out, instead of either trying to get back to first or trying to outrun and get, you get that toss back and forth between the two bases and see who can make the mistake first so that you can get onto the second base. And it's a similar scenario. So when you're micromanaging your trade and you're moving that stop too quickly, whatever, that's exactly what's happening. You're just giving up. You might as well, because you don't understand the game. And that's really what it comes down to. So putting some emphasis on your exit strategy, both your targets and your stop, is extremely important if you want to reach that level of success that we all want to in our trading. So that's pretty much it. And Dan, I think you know what time it is.
Don't say it. Yep. Yeah. Unfortunately, we are out of time. Always good to co-host with you, Tracy Ball, and for all the people in the All Access Pass in the chat. Pleasure having you here, joining us, adding to the conversation, asking those questions. And for everybody that tunes in each and every week, we do appreciate you guys. Make sure you shoot Tracy, myself, messages with anything that you guys have questions on. We do have links below. You can check out Real Life Trading. We have All Access Pass. You can live day trade with us and free education online. But until next time, you guys are incredible, and we will see you guys later.